Tips to become a better mutual fund investor. Before starting, don't forget to like and subscribe to our channel for more future updates. So, let's start. Define your investment goals. Before investing in mutual funds, you should define your investment goals. This will help you to determine the type of mutual funds that will meet your needs. Defining your investment goals is an important step in becoming a better mutual fund investor. Investment goals are specific objectives that you want to achieve through investing. They can be short-term, medium-term, or long-term, and can include things like saving for retirement, buying a house, paying for your child's education, or building wealth. For example, if your goal is to save for a down payment on a house, you might want to consider investing in a more conservative fund that focuses on income or bond investments. Understand the different types of mutual funds. Mutual funds come in different types, such as equity funds, bond funds, index funds, sector funds, etc. Each type has different investment goals and strategies, and it is important to understand the differences between them to make informed investment decisions. Research and compare mutual funds. You should conduct thorough research and compare different mutual funds before investing. This includes reviewing the fund's performance, expense ratio, management team, and historical returns. Diversify your investments. Diversification is essential in mutual fund investing to reduce the risk of losses. This means investing in a mix of different mutual funds with varying investment goals, asset classes, and strategies. Monitor your investments. It is important to keep track of your mutual fund investments regularly. This involves reviewing the performance of your investments, adjusting your portfolio as needed, and rebalancing your investments to maintain a proper asset allocation. Consult a financial advisor. If you are new to mutual fund investing or have limited knowledge about the investment market, consider consulting a financial advisor. They can provide valuable advice on investment strategies and help you create a customized investment plan that meets your goals and risk tolerance. Consulting a financial advisor can be beneficial for those who are new to mutual fund investing or want professional guidance on investment strategies. A financial advisor can help you identify your investment goals, assess your risk tolerance, and recommend a portfolio of mutual funds that align with your investment objectives. When choosing a financial advisor, consider their experience and credentials, as well as their investment philosophy and approach. Look for a fiduciary advisor who is legally obligated to act in your best interest and has no conflicts of interest. This is it for today's video. What do you think of our video? Feel free to share your thoughts in the comment section below. Don't forget to like and subscribe to our channel for more future updates. Thanks for watching.